What's up, everybody? Welcome to the Stocks channel. My name is Cory and this will be your daily stock market technical analysis update. We saw the stock market have a great day today and we're going into a potentially contested US election. So before we jump into the charts, please help me out by smashing that like button and go ahead and subscribe to the channel so you can follow along with my daily updates. First up, we're going to take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Okay, so first up, let's address the contested US election right up front. I do not believe that a contested US election is going to matter one bit for the stock market. At this point, the stock market doesn't care whether its president is Trump or Biden, and that is not going to heavily influence the price action. If you saw my video update on Sunday, you remember I said after the US election we would see a lot less volatility and the price action would start going back higher because we're in a long-term bullish trend. The technicals are predicting that the stock market wants to go higher. The president is not going to change that. So let's stick to the technicals and let's follow the price action because it's always going to give us an edge in trading and in investing in the stock market. So on the S&P 500, we see we went up 2.23% today and we closed well back above the 20 simple moving average. So we saw yesterday we were starting to get some bullish price action and we were getting right up to that resistance level, which was going to be that open gap right around $338. Well, the bulls said they didn't care about that gap and they gapped up over the gap, which actually creates that gap as support levels for the bulls now. So the bulls used that gap as support right around that $339 level and bounced off and closed much higher for the day, well above that gap at $343. Now you can see intraday at one point we were trading all the way up about $348 on the SPY ETF. So we had a very bullish day and the price action is extremely bullish because we got all the way back above the 20 simple moving average in just 3 short trading days. You can also see that the trend is now reversing from a bear trend into a short-term bull trend, and the 20 simple moving average is no longer negative sloping. So the bulls did a lot of work on the chart and now technically the chart is beginning to look bullish instead of bearish. So don't forget we do have the gap at 339 and it will close at 338 and we know that gaps typically get filled. We also have a lower high and higher low situation, so we're in this consolidation correction wedge pattern, which means we could find resistance at the top of this wedge, which is right around $349. So it's possible if we have more bullish price action tomorrow, we could eventually find resistance and we could start heading back lower to close this gap at 338. Now that gap closure is going to be a very good buying opportunity because long term we're bullish on this market. So a close of that gap means we'll hit our downside price targets and we're going to start looking higher from that level. So right now $338 is identified as a great support level, and that doesn't mean we can't go lower, so we don't want to get overconfident and just assume we're going to bounce off that level and start heading higher. But we do have our sights set on 338 as an opportunity for a strong support level for the bulls to build off of if we do start coming down from these price targets. Now if we start breaking below the gap, we're going to have support at all of these moving averages, which are going to start heading higher each day that the price action continues to go higher. If we for some reason break all the way below the gap, we do have our support trend line, and depending on the day we could find support on this trend line somewhere between $328 and $331. Remember, 331 was our previous gap closure, so that could still be a support level if we do end up getting down in that area. So there's still going to be volatility in this market, but you can see that volatility is definitely subsiding and we're starting to get some good price action and the bulls are starting to take back over control of the trend. Now if we do break above this resistance trend line, that will be extreme bullishness and we could continue to melt up and we could get into a blow off top situation. But right now we have to assume that that level should be a pretty strong resistance level because we can see we did get rejected there before. So when we start approaching that resistance level at 348, we want to get a little more cautious and start preparing for a possible pullback. Next up is the Nasdaq 100 QQQ ETF, and we can see today's price action was extremely bullish and we gapped well above the old gap and created an even new gap. So we definitely broke out of this resistance trend line, so we're going to go ahead and delete that. And we could see that we have this huge gap space from $281 all the way down to $276. So there's a huge gap on the Nasdaq 100, and we also have that lower high and higher low situation where we're consolidating in a wedge. So on the Nasdaq 100, we could find support at our resistance trend line above right around $292, and below we're going to have support at this gap at $281. And the lower gap will close around $276. So right now, if you're not currently in this market, I don't suggest FOMOing in and chasing this while we have these huge gaps open below. And while yes, we can go higher and hit this resistance before coming back, it's not worth the risk right now. So if you missed out on the buying opportunity down here and you didn't get in back here when there was a good opportunity and we were buying low, then I wouldn't chase it now. Wait for the next opportunity, and when we finally get another opportunity to buy in, be ready to buy. Right now, we want to make our plan for our next entry, and we don't want to chase something that we missed out on. Don't forget, if you're looking for entries and exits on trading, there is the Stock Channel Discord, and you can find a link in the description on how to become a member of the Discord channel. So on the Nasdaq 100, we got that bullish price action closing back above the 20 simple moving average, and we could see that the trend is also reversing from a bear trend to a bull trend, and the 20 simple moving average is starting to slope to the positive side again. So in just a few short days, we've completely reversed the bearish trend, and we've got bullish price action and bullish trending yet again. So the election volatility is definitely subsiding, and I would not get caught up in the contested election, and don't just assume you can short this market because there should be volatility. As we'll get into later, volatility is definitely starting to head lower, and we want to start preparing for a situation where fear is leaving this market and the market is ready to start heading higher. If we do break below the gap on the Nasdaq 100, we could find support at our support trend line, which is somewhere around $271 to $274, depending on when we get down there. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF. And we see the Dow Jones looking really good today, closing back above its 50 EMA, but just below the 20 simple moving average. Now the Dow has gaps that are open at 272 down to 269, and another gap down at 267, which will close at 265. So the Dow has some bullish price action, and the trend is still short-term bearish, but it's looking like it could be reversing soon and start heading to the bull side. Now on the Dow, we're also forming these lower highs, and we could find resistance somewhere around $286 on the DIA ETF. If we do break above that, that will be bullish, and we'll be looking for our next resistance level somewhere around $291. Next up is the VIX, which is our fear indicator, and we see the VIX getting destroyed today, closing down over negative 16% and just above the 50 EMA. So you can definitely call this bearish price action on the VIX, and this is proof that fear is leaving the market. Now that the election is coming to an end, uncertainty is also coming to an end, and people are ready to start buying back into the market, and fear is starting to leave this market. So you can see we broke back down to a new low, which is below this resistance trend line. It did not hold up as support, and we didn't break out above resistance at that $40 level. So the VIX looks like it's going to start coming back down because the bearish price action is telling us that we're likely to see the trend reverse, and the bullish trend on the VIX is likely to turn into a bearish trend. Now it doesn't mean volatility can't still bounce off these levels. We could still see volatility in this market, and the VIX is still in the high 20s and possibly low 30s. So that's still a volatile market, so we don't want to get too confident, and we don't want to go full bull just yet. But things are definitely looking good for the bulls because we're seeing bullish price action, and we're seeing fear start subsiding from this market. Next up is Apple stock, which is our market moving stock, and we see Apple closing up above the 50 EMA as well as the 13 EMA. We're still closing below the 20 simple moving average, and we're still trading below our resistance trend line. But overall, that's some good price action for Apple. And the trend could be reversing soon if we start getting more bullish price action. And if we can close above the 20 simple moving average and break out of this resistance trend line, the bullish trend should start forming, and Apple could become a buy yet again. However, we still are in a short-term bear trend, and the price action is still below the 20 simple moving average. So we don't want to get overly confident, and there's still a possibility that we start heading lower from here. So if we do start heading lower, we should be able to find support at $104. But if we break below that, we're likely going to close the gap at 96. This resistance trend line on Apple will break at a price target above $117. Next up is Tesla stock, and we see Tesla's price action closing below the 20 simple moving average again, but still closing above the 13 EMA. It looks like the 5 EMA is getting ready to cross back above the 13 EMA, which would be a short-term bull trend forming on Tesla. So overall, Tesla looks like it's at this inflection area where if it continues to head higher from this position, it could start going into a bullish trend, and we could start heading back up to that $500 price target. However, if Tesla starts heading lower here, the bear trend will remain intact, and we could see our support levels at 362 become our price target yet again. So right now, Tesla's looking pretty neutral, and you can see that that 20 simple moving average is very flat, and it's really not sloping up or down. So Tesla could go either way for the bulls or bears, and right now it's more in that neutral category, just waiting to decide which direction it wants to go. Next up's the US dollar, and this is DXY, and we see the dollar did close above the 20 simple moving average, but we see that the trend is starting to turn bearish, and that 5 EMA is getting ready to cross below the 50. So the dollar looks like it didn't really go back into that bull run that it was starting to form, and the dollar looks like it could be resuming a downward trend. A weak dollar could be bullish for stocks, so we want to continue to watch the dollar. Next up is gold, and we see gold starting to go into a short-term bull trend because that 5 EMA is just starting to cross above the 13. The price action is also holding up to the bull side, and we're closing above all the moving averages. So now that gold's bounced off the support and we're starting to go into a bull trend, we want to start looking for gold to go back into that bull market, and we want to see if gold can break out of this resistance level at 1930. So right now gold's looking bullish, and it looks like it could be a good time to start accumulating some gold. Next up is Bitcoin, and Bitcoin did break our resistance level last night at 13,800, and we did get a close above that, so that resistance level should now become support. So Bitcoin is still looking bullish, and we can see that volume is still increasing on higher prices. So higher price action on higher volume is always going to be a very bullish sign. And because the volume is going up on higher price action, that sets us to our upper price target of $17,000. You can see that the moving averages are stacked to the bull side, and we're in a very strong upward sloping bull market right now. So Bitcoin's looking good, and I'm looking for Bitcoin to continue to head higher. Next up is financials, and we see financials closing below the 20 simple moving average but above the 50 EMA. It looks like the short-term bear trend could be reversing soon, and it looks like that 5 EMA is getting ready to start crossing back above the 13. We're holding up above our support trend line, and it looks like financials are starting to go back into a short-term bull market. Next up's industrials, and we did get a close just below the 20 simple moving average, but the 5 EMA looks like it's getting ready to cross above the 13. So it looks like we're going back into a short-term bull market on the industrials very soon. Next up is healthcare, and we see healthcare looking really bullish today with a huge gap up and closing just above our resistance level, which is our previous high. So the trend on healthcare is going back to the bull side, and we're getting very bullish price action. So healthcare looks like it's also going back into a bull market. So going back to the S&P 500, you could see that all the sectors are looking bullish, and it looks like they're all snapping their bear trends and starting to go into bull trends. We're getting bullish price action almost across the board, and we see that the S&P 500 is also getting very bullish price action. So on the S&P 500 right now, we want to set our eyes to our resistance level at 348, and if we get a close above that, that will be a very bullish sign for the S&P 500. Don't forget about the gap below at 338, and as we know, gaps typically get filled, so we're looking for that as an opportunity for a potential buy in the future. So please help me out by smashing that like button, and if you're new, go ahead and smash that subscribe button. And also, if you're enjoying these video updates, please consider supporting the stocks channel by becoming a member. Look at the link in the description for more details. Thanks for watching, everybody. Good luck out there, and as always, I will see you in the next episode.